Joining us now with this Squawk Picks is Paul Meeks, Independent Solutions Wealth Management Portfolio Manager. People that owned these stocks long term, though, probably small consolation. They're up, but they sold off a lot over the past couple of years as the Fed has moved interest rates higher. But people that weren't in, that bought them, they're doing pretty well here. Paul, is it more than just a bounce after a big sell-off? Are there fundamental reasons why technology is outperforming now?
I don't think there are enough fundamental reasons. Now, the big theme in technology, as Meta says it, is the year of efficiency. So a lot of these gains, Joe, have come from some very aggressive cost cutting, which I expect to continue to try to bolster operating margins. I don't think we've seen a really clear inflection yet in revenue. And of course, you do have the artificial intelligence theme. That's real. That'll be big. I think that we tech investors are manic depressives, and right now we're probably a little bit too manic with AI. But yes, that is what everybody's focused on. All the analysts on Wall Street. This morning I read 2 or 3 reports from sell-side analysts all talking about how to play AI. So yes, a combination of some good and bad, but I do think the biggest driver will continue to be relief on interest rates. When rates stabilize and then start to drop, then that'll be the biggest tech driver of all, Joe.
Yeah, that's the big macro. I was going to get to that eventually. That's a big macro factor that's probably at play. In an article today, I saw Zuckerberg last time, and we know he changed the name of the company to Meta, sunk billions of dollars into it. But most recently, I think he said the term AI like 27 times, and metaverse was only mentioned like 6 or 7 times. He's still very bullish on the metaverse, but now it's been pushed out, I guess, and AI is sort of front and center. Do you think there's big promise for the metaverse? We've been kidding about it because real estate values are down a lot in the metaverse. And I just can't believe people were buying property in the metaverse. But do you think it's going to be a big thing at some point down the road, Paul?
Yeah, I actually think the metaverse, or however it's described in the end, will be pretty significant. But here's the rub. The metaverse might be driven by hardware. And hardware has very low profitability versus software and the model in social media that Meta has come from. So be careful what you ask for. Even if it's big for Meta and others, it might be dominated by hardware-oriented products that are much, much, much less profitable than the social media business, which is very profitable.
We promised your picks. So would you be just buying these because, I mean, you wouldn't put a lot of money into tech right now? Would you wait to see the whites of the eyes for the Fed to cut, or are there names you'd buy right now? Or
there are some names I'd buy right now. Last year I was in the bunker.
What are they?
Last year I was in the bunker with a huge cash hoard. I have now gone to a fully invested position, but I try to play it pretty defensive. You know, I like the data networking names. I like cybersecurity. I like semiconductors that are sold into automobiles or industrial applications. And I do like some Chinese reopening plays. So I'm not going with a broad brushstroke. I actually think it's okay now to be fully invested in tech, but still, let's take a look at the smaller cap, more defensive-oriented names, not all of these artificial intelligence fly-by-nights. I start to really worry about them because some of them are egregiously priced.